Hey, Bulls and Bears, what is happening? It is Saturday, February 25th, 2023, back with another blast of economic reality. Let's go ahead and get right into it. It's actually very cold today, very cold. You might see me rubbing my hands a bit here, bundled up as usual. There's actually a lot of snow coming down here in California, which is very unusual. Usually we get it in the mountains each year at the higher elevations, but now even in lower elevations, some cities are seeing some pretty good snowfall here in California. So very strange times here with the weather, and a lot of other things are strange economically, financially. We're going to talk about that here as well. Let's talk about what is going to be going down this year. We're at the close to the end of the line for most U.S. consumers because the rate of debt that's being accumulated right now by the population, by most people, it's not going to last that much longer. Sure, they can find new ways to keep things from falling apart. Just look at what they did starting in 2020 with the housing and all the protections and the prevention programs and the stimulus checks and the cancellations of different payments and elimination of fees and just all these things, right? So there's a lot of things that can be done. But here's the thing about it. The so-called programs that come in to help, they usually make things worse. So let me ask you here, did all the rental protections that were in place to keep people from getting evicted, did those make housing more affordable? No, you saw rents spike even faster after those protections were put in place. And, there's not a coincidence there. There's a direct correlation there. And we see that everywhere we look. Anytime that there's some sort of program to try to make things better, not just 90% of the time, I think 100% of the time, I think it always gets worse. And that's just the nature of trying to just throw money at problems instead of looking at the underlying issues. For example, does handing out money to people because prices are too high and people can't afford things, so is the solution handing out money? Well, you may think so, I guess, if you're in third grade, but a lot of the people that are making these decisions, they seem like they're in third grade because they expect these things to work or fix the issue. Well, handing money out to people may seem like a good solution, but it's going to make things more expensive. It's going to allow people to buy things that they normally couldn't afford to buy. So it's going to be more demand, more on the demand side. And unless you're increasing the production side, that's going to cause prices to rise. Supply outweighs demand, very simple, right? But let's go to a recent survey here that was put out by Peter Schiff. And this is just one of the many dilemmas that we're going to see in this economy here in the U.S. He put out the question here: if the U.S. goes into an official recession with a spike in unemployment, but inflation is measured by CPI remains well above the 2% inflation target, do you expect the Fed to cut rates to stimulate the economy or leave rates high to help keep fighting inflation? And it was actually pretty close. The viewers came in, pivot to stimulate, pivot meaning lower rates back down to rock bottom to stimulate the economy, to make it easier for people to borrow money at lower rates. Almost half there, right? 47.7%. But a little bit more than that said we're going to keep fighting inflation, that they're going to keep rates high, 52.3%. So it's pretty interesting when you look at it. It's almost evenly split. And here's something that I don't think is listed in here or included in this question. What if unemployment does rise, but they just don't acknowledge it? They'll just tell us a low number. Oh, it's still 3.7, but yet you've got all these other people that are out of the labor force. Just like right now, we've got close to 100 million people out of the labor force. When you look at the labor force participation rate, right? But no, they don't want us looking at that. They want us just looking at this number that they give us here on the news, on the business channels. They want us to have blinders on. They don't want us to look at any other numbers. So what's not being factored into this, I think, is these numbers could rise. For example, unemployment could rise, but they just simply will not acknowledge it, right? No matter how much pain is going on out there, no matter how many people become homeless and destitute, no matter how much poverty takes over, they still will just say, nope, here's this number on the screen, look at the number, and this is why we're going to keep rates high, because everything's fine, unemployment's still low. And then on the flip side, they'll look at jobs added, and it could be tens of thousands of people that took part-time jobs because they lost their full-time job, but that will be counted towards the jobs added, and they'll look and they'll say, no, the economy's doing great. Look at all the jobs added. we're going to keep rates high. Right? So that is where I tend to agree with people that say they're going to keep rates high to help keep fighting inflation. And no, I don't think they're going to get inflation down. I think it's going to stay where it's at now and likely go even higher. And I really do hope I'm wrong on that. I mean, there's people out there that think deflation is worse than inflation. I think just the opposite. Deflation usually creates a lower cost of living. And yes, it may hurt a lot of investment portfolios because the value of things, dropped, your property, your assets, even the stock market. But overall, if it's a lower cost of living, to me, that is a much better thing. All right, so now let's do one more out of Peter Schiff, and then we'll move on. As you know, I do follow Peter Schiff pretty closely, and he's one of the few economists that I followed for quite a while. Actually, I first saw him on a business news channel back in 2006, I believe, talking about the housing bubble. Turned out he was right, and at the time he was doing the interview, people were laughing at him. They said, no, homes could never come down. The prices could never fall because the fundamentals are there. He turned out to be right. But here's something else that he put out just recently. To actually bring inflation back down to 2%, not only will the Fed have to raise interest rates much higher and shrink their balance sheet much faster, but consumer credit must be tightened, and the federal government must make substantial cuts to spending, including Social Security and Medicare. All right, so what he's saying here is that spending is one of the big drivers of inflation. And yes, that is, if you look at the laws of supply and demand. The more people that have money to spend, the more things they're going to buy. Therefore, the more inflation is going to go up, the more the prices are going to go up. So therefore, if you cut Social Security, if you cut Medicare, and if you restrict banks from loaning out so much money, and that would be this part right here, consumer credit must be tightened, then you would have some deflation and falling prices. But it's not that simple. If you cut off Social Security and Medicare, then the people that depend on those things will be buying less, but then the people that can afford those things will probably buy even more of the things that they can afford just fine because, they're the wealthy, and you may not see inflation come down as fast as you think. So I don't think that's a solution, but I do get what he's talking about here. If we were to ever cut Social Security or even cut back on it or Medicare, I would think you would see so many desperate people and just a massive surge in poverty if that were to happen. Next, let's talk about this right here. We're going to try to make this program today, this episode, more graphic and picture oriented. Nature Supply Company put this out, and we talk about the price of food here, quite frequently because that's part of everyone's budget, right? Household budget, groceries. In 1800, 50% of Americans were farming. In 1945, Americans grew 45% of their food in their backyard gardens. Wow, almost half. That's amazing. 2020, Americans grow less than 0.1% of their food in their backyard gardens, folks. This is the problem. This is why I say that the next economic downturn is going to be worse than the Great Depression. We're now just beginning to start see food shortages. Just a couple years ago, people said that was impossible when I talked about it. But now we're seeing the rising prices. It starts with rising prices because when things become more scarce, that's what you see initially is rising prices because you have less product available and more demand for it. And that goes back to people having money to spend and money being given out to people and etc. So folks, this is not good. Look at this change since 1945. Yes, it was a long time ago. But humans are still the same. We still need food and calories to survive. But back then, almost half the people, grew their own food. Or I should say got 45% of their food from their own garden. That way it's fresh. That way it hasn't been contaminated. Maybe your pet dog went and peed on the plants or something like that, but you could spray it off and, it wasn't anything, that bad. And this is one of the big dangers of having consolidated food manufacturing, right? So when you've got one or two companies that control most of the food production, and depending on, what food you're talking about, right? So if you have a bunch of food places that go bankrupt or burn up, what have you, and there's only 3 or 4 of them and you lose half of them, that's a big problem. But if you have thousands across the United States or millions with people growing their own, it's not that big of a deal if 1 or 2 people gets their garden wiped out or something like that. All right, let's jump over to this here. This is an NPR headline, obviously. Despite high inflation, Americans are spending like crazy, and it's kind of puzzling. So let's see, everything costs more, so people have to spend more, but yet it's a mystery why people are spending more. So just a ridiculous headline, in my opinion. All right, but it's not that simple. Just like the Peter Schiff post earlier, lending has to be pulled back because right now people are being allowed to go in just so much debt, right? All-time high debt levels. And you have to wonder why banks would do that, knowing what happened in 2008, the financial crisis. Well, here's the reason. One, they don't have to have any money in the bank to loan it out to you. It's a fake money system, a digital fiat money system, so they can loan out endless amounts of money that actually does not exist. And if people don't pay it back, it's okay because they could just create more of it. And so that's what we're seeing, folks. We're seeing just very loose monetary policy. Um, and of course, that's going to equal more spending. The more credits available to people, the more debt, and the more expensive things are. It's going to make people look like it's going to make it look like people are spending a lot of money, which they are. Now let's go to this one right here. This is the price index for services year over year. And as you can see here, as we go into the most recent time here, things are getting more expensive, right? So when they say inflation's coming down, it has to come down across the board. For example, if someone has higher fuel expenses, they're going to have to raise their prices. If you're a business, you're going to raise your prices to compensate for those higher fuel expenses. And yes, fuel prices came down a little bit, but overall, it's dominoes falling. So when one thing gets more expensive, another thing is going to get more expensive, and it just keeps going, right? So when things get more expensive for everyone, well, people that are actually selling products or giving services are going to start charging more for those items. Pretty simple, right? So look to the far right here of the chart and tell me, is inflation coming under control? And with the price of services going up so much here, everything that you have to pay for that's a service, people are going to charge more. Even haircuts. My place that we go for haircuts, they've increased their price probably every year for the past few years, and it's up to $25 now. I know that may not sound like much, but they started off at like $16, I think, just 5 years ago. So from $16 to $25, I mean, that's a pretty big increase. But here's where we are, folks, and this is economic reality. And when you have a high cost of living, people are going to charge more for stuff because they have to pay their bills. So anything that people do for you as a service, any product that you buy, it's likely going to get more expensive unless you have a massive oversupply, which hopefully we'll see in the housing market and in the automobile market. When people start losing their cars and when car repossessions really start to increase, that's what could happen. We could see some price declines or price drops and some deflation in those areas, unless they come out with a program to prevent that from happening. I don't want people to lose their cars, but you have to let fundamentals take place if you ever want to see prices come back down to affordability, right? So it'll be bad at first when people lose their car, but then if they just wait a year or two, things will get less expensive and more affordable. Then they can buy the car again for much cheaper, right? Pretty simple, folks. Hope everybody liked this Saturday report, the charts. We thank wolfstreet.com for putting these charts out and letting us display them here. Please go to Wolf Street, check out his website. And thanks for supporting my channel. Thanks for being here. And I'll try to chat a little bit down in comments. If some of you want to leave comments, I'll be down there maybe chatting with a few of you. Keep stacking, everybody. Hope everybody's well. Thanks for being here. Big love. Bye for now. Keep stacking in peace.